Okay, so now we talk about the apartments, the 5 to 8 units. But last time we talked about residential loan, are loans for property from 1 to 4 units. So you have a single-family home, a duplex, fourplex, or a condo, townhouse. Those are residential, or a mobile home that are called. You also put them into residential. But now if you have a 5 units, 6 units, 8 units, we call them apartment. We don't call them 5 units. We really call them apartment. Whenever we see 5 units, 6 units, 7, 8 units or more, we call them apartment, and we consider them as commercial property. Wait a minute. Commercial property. What's the difference between commercial property and residential property? When we do residential property loan, we look mainly into the borrower income. That's most important. Of course, we look into rental incomes. But when we look into commercial property, we look mainly into the property itself. Commercial property is defined as income producing property. So we look into the property income mostly. So this loan is for 5 units to 8 units. If we have something 9 unit, 20 unit, 50 unit, 100 unit, we can still do it, but it's a different loan type. We can still do it here at Pacific Y. We can do many units, but today I specifically talk about 5 to 8 units because this is really easy to do, and our residential loan department can take care of it. You don't have to go to Leon to get this done because Leon will take care of commercial loan. But this 5 to 8 unit, the mortgage team take care of 5 to 8 units too. Besides all the 1 to 4 unit, now the mortgage team can do 5 to 8 units. Of course, mortgage team also can do mobile home loan. So everybody, if you don't know, at Pacific Y, we do mobile home loans too. Okay? And we also do HELOC loan. HELOC. If someone go to Wells Fargo right now, Wells Fargo, to apply for HELOC loan, they don't get it anymore. Wells Fargo doesn't offer any more HELOC lines. I have a client who has a line, HELOC line, and Wells Fargo send them a letter say, we close your HELOC line. So there are no HELOC line at Wells Fargo, but at Pacific Y we do HELOCs. Okay. A lot of people don't want to refinance cash out or refinance right now because they have very low interest rate that they refinanced in 2021. It was 2.5%, 2.8%, or 2.7%. They don't want to refinance cash out because if they do refinance cash out, they have to come up with a very high rate on their whole loan amount. So people right now, they want to do a HELOC line. The HELOC line, that means they just get somebody out of the home, get some equity from the home. They can use it any way they want. We don't have to touch their current loan, which have very low interest rate. Okay, so we can do HELOC loan, we can do mobile home loan, and we can do 1 to 4 unit loan, and we can do 5 to 8 unit loan in the residential loan department. But if you have something like 9 unit, 20 unit, 100 unit, go to Leon. Leon do commercial loan. Okay, residential commercial loan. This is just a definition, right? For commercial loan. Commercial loan have 5 units or more, office building, industrial building, hotel, motel, gas station, restaurant. So anything that's not 1 to 4 unit, that's commercial. Okay? Any question? No question? We can move on. Okay. These are the program highlights. So for this particular training, we talk about 5 to 8 units. Okay? And of course, when you own a 5 to 8 unit, obviously this is an investment property, right? They know when you say you own it because you want to live in it. It's not the case. It has to be investment property. Okay, and this particular program, this one, the one we're talking right now, we don't need to see tax return of the borrower. We don't need their income, but we look into DSCR. Debt Services Coverage Ratio. What does it mean? It the formula of DSCR is equal to monthly rental income divided by the monthly PITIA. So the top is the monthly income, and the bottom is their mortgage, their tax, their insurance, or HOA, whatever. So if somebody own a unit and every month he collect 20,000 rental income, gross rental income, and his monthly payment for the mortgage and the property tax and the insurance is also 20,000. He qualified because 20,000 divided by 20,000 is 1. Equal to 1 or greater than 1 will work. If he owns a property, 8 units and 20,000 income every month, but his PITIA is only 18,000, then he overqualified because it's over 1%. So this is really easy to qualify. It's so simple. So that's why it's easy. We all can do it. You can go talk to your client. I'm doing 5 to 8 unit apartment building right now loan. You can buy one and we can help you with a very easy loan. Because from the past, I talked to some real estate investors, they're afraid to do commercial loan because it's harder. But now it's easier, okay? The credit report, we will have to run it. And in this particular case, we do need to see credit, okay? This is different from the one we talked previously, okay, you guys? We talked about 2 different things. When we just start a meeting, we talk about the borrower who have no credit. That's called conventional loan, 1 to 4 units, okay? This one, 5 to 8 units, and we do want to run the credit. And they have to have middle score of 660. So they're different, okay? Maximum loan amount right now is $2 million. So if somebody buy something, they can $3 million or $4 million, whatever, as long as they have the down payment, we can give them a $2 million loan amount for their 5 to 8 units properties. Okay. What does it mean cash in hand up to 1 million? If somebody currently owns a 5 unit or 8 units and they want to refinance cash out, we can cash out and they can bring home up to $1 million in hand. That means, for example, they right now have a current debt of $800,000 and they want to bring home, they want cash to bring home. They refinance cash out with us with a loan amount 1.8 million. So to pay off 800,000 to the own loan and bring home 1 million cash, put in the pocket or in the bank statement, they can use it for any reason they want. So they can cash out from the 5 to 8 units up to $1 million cash to bring home. Because people who own over 5 units, they are investor. They are real estate investor, and they not only they want to take out the money from their equity to invest in more property, right? So we can help those investors to buy more by cash out, and they can cash out up to $1 million to buy more. Is that awesome, everybody? You learned something today, anybody? Say something.
Yes. I have a question. So, what you mean when
Absolutely.
when
awesome.
we use the monthly income divide to PITI to get the one or over 1? So the monthly income is the appraisal doing that to get the.
Oh, good. Okay, so Anna is going back to the DSCR formula. So the DSCR formula is the gross monthly income divided by the PITIA.
Yep.
And Anna asked, how do we know the rental income? Okay, lender, when we do appraisal,
Yeah.
the appraiser will define how much is the rental income monthly. If that's a new purchase loan, then the appraisal will come out. But if somebody owned the property for a while, right, and they filed tax return, but we don't look into tax return. But okay, when we submit this to lender, even though we don't submit the tax return, W-2 of the borrower, but we submit the rent roll statement to the lender. the rental statement, 1 year rental statement or 2 year rental statement to the lender, and the rental will show the rent amount. Okay? It shows the rent history. So it's showing. So either on appraisal or it's from the rent roll. Good question.
Thank you.
You said that the calculation, the DSCR, is it include the net or the gross income?
Gross,
Close.
gross of the rent, the monthly rent.
So if some people they don't
Okay.
have the rent roll, they can provide tax because they already like file with tax.
Normally commercial loan, they always have to have a rent roll. They always have to have. The next item, large deposit, do not require sourcing. Ooh, what does it mean? Because when they purchasing this 8-unit apartment, we have to show the down payment, right? And they turn in their bank statement. And if it have a big deposit, lender doesn't care. Lender doesn't care. Now lender is a lot easier. Okay?
Yeah, money is money. It doesn't matter it's dirty or
They
not.
don't care.
Yeah, they don't
anymore.
care.
They don't care where the money come from. As long as they can put the money in the bank, that's good enough, right? If they can put that money in the bank, I think that's a good source of money. I don't know, dirty money. How you put dirty money in the bank? It's hard, right? But as long as they can do that, lender is okay with it. So, or if you don't want, some people might be afraid. Then we don't need to turn in the bank statement. We can turn in a current balance or VOD showing the average balance right now, right? Okay, foreign national allowed. So if you have someone from other country, if they want to invest in the 8 units, easy. So it's really easy though. If a foreigner, we don't need their credit report. Right? We don't even need they have credits. Foreigner, they don't have credits. So all we care is the DSCR, basically. For the people who U.S. citizen or live in U.S., we look into their credits, we look into their DSCR. For the foreigner, all we look into is DSCR.
I missed that earlier. So DSCR stands for what?
Debt services
Coverage ratio.
coverage ratio.
Rate.
Coverage ratio, yeah. Okay. Any question before we move on? No question? Okay, so for this 8 to 5 unit loan program, we offer 30-year fixed or 7/6 ARM. So we all know 30-year fixed is easy to know, so one fixed rate for 30 years done. But 7/6 means the rate will be fixed the first 7 years. Starting year 8, the rate gonna change. And it changed once a year. Okay, and it change depend on the market rates. What is the 6? The 6 is, for example, if you lock in the rate today at 7% for the loan, a unit, just an example, right? 7%. By the year number 8, the rate cannot go over 13%. So 7 plus 6 cannot be over. Let's make another number so easier. So if you lock in the rate at 10 today, 10%, just an example, so that easier for you to understand. The first 7 year, the rate is 10%, right? Year number 8, the rate has to be below 16%. It cannot be over 16% because the 6 is the cap of every year when it changes. It cannot go over 6%, or it cannot go lower than 6%. So 10 can be 16 max, or 10 can be 5 or 4 something max. It cannot be lower than 4. It cannot be higher than 16. Okay. So that 6 just means the cap of each year. But the lifetime cap I don't know. It doesn't say here. It doesn't say here. The lifetime can be 18%, 20%, I don't know. But each year when it changed, it capped at 6%. Okay, because people don't want a big jump, because a big jump might be a shock in payment. Right, so it have a cap. Any question? Or you are all clear? So when you talk to your client about 6 arm, it used to be 7-2 or 7-1 arm, now it's 7-6 arm. So when you talk to your client about arm loan, you need to be able to explain to them what 7-6 means. Okay? You have to be able to explain to them what is 7, what is 6, right? You have to know how to explain it to them. Prepayment option, 1 year, 2 year, 3 year, 4 year, or 5 years. So that means this loan have prepayment penalty. If you do a 1 year prepayment penalty, your rate is higher than 5 year prepayment penalty. So the longer the prepayment penalty years, the lower the rate. So if your client said, I will refinance in 1 year or 2 years, then lock the rate 1 year or 2 year prepayment. But if they say, I would never refinance, or I won't refinance until 10 years later, then do the 5 year prepayment. So you have to talk to your client regarding to how soon they're thinking of changing the loan. If they change it soon enough, then you want to lock the rate where the prepayment years is like 1 or 2 years or 3 years, okay? First time investor is not eligible. Must be an experienced landlord for at least 1 year. What does it mean? Anyone? What does it mean? Như Smiley, what does it mean?
So you have experienced landlord for at least 1 year. It means you own an investment property for at least 1 year.
Good job. Yeah, you own another property for at least 1 year, another investment property. So if you have a home for rent right now, it can be a 1 unit or a condo, but you rent it for over a year or 1 year, then you are not a first-time landlord. You are an experienced landlord because you already rent something, either a condo or a townhouse or a single-family house or a duplex in the past.
Anywhere
Anything at least 1 year.
And anywhere in state.
Anywhere, any properties, doesn't matter, it's residential property or commercial property, as long as you are an experienced landlord, you qualify for this 5 to 8 unit loan program. They don't offer this to the one who never been renting before, because 5 to 8 units is a bigger property, need more management. And they don't want somebody who have no experience and jump in and might have a problem. If you already rent 1 year, you know what to expect. This will be harder because you have 8 tenants instead of 1, right? So they want somebody with some experience. That makes sense. Lender want to make sure you're doing well, right?
Last week.
So you can pay back. Okay, minimum credit score 660, investment properties only. Again, maximum cash in hand 1 million, so you can refinance cash out. Maximum bringing home $1 million. Minimum loan amount is $400,000. Minimum. I don't think that is a smaller loan amount because a duplex now is over $1 million already in the Bay Area. So if we do 5 unit, 8 unit, it's more than 2 or 3 million. So the loan amount is not a problem, but the maximum loan amount is a problem because it's only 2 million. See? You see? The minimum loan amount, I don't have to worry about it, but I'm worried about the maximum loan amount. That means my client will have to come in with a lot more down payment. Okay? This is just a 3-year prepayment penalty. You see 3%, 333. If somebody lock in the loan with 3-year prepayment penalty, okay? And doesn't matter if they refinance in year 1, year 2, or year 3, they have to pay 3% penalty of the loan amount, of the original loan amount. Yeah. So if you lock in the rate for them, make sure you know they will refinance in certain years, so you don't make them pay back the prepayment penalty, because when they find out how much they have to pay, they won't refinance. And also they might miss a chance of doing something. So be clear to tell them exactly, hey, if you want to refinance within 5 years, then we have to lock your rate like 1, 2, or 3 years. If you don't think you refinance within 5 years, then we can lock it 5-year prepayment penalty because you get lower rates. Okay, so foreign national is okay. Any question from this slide, or we're gonna move on?
What is the required down payment, Minh Châu?
Let's go to the next slide. Good question. Oh, we talked about this already. Move on. Here you go. Your question is answered. Okay. You are ahead of me. Anyway, so we all know how to read this type of table, right? You read across from top to bottom. So the top is FICO score and loan to value or combined loan to value. Okay. So you see on the first column you have FICO score. That means the middle credit score of 700 or 660. And look at the 700 credit score. We go across now. For maximum loan amount of $1.5 million. Okay. If it is a purchase, minimum down payment is, who tell me? $1.5 million loan amount. If a purchase loan, what is the minimum down payment?
25%.
25%. That means you know how to read the table. I'm just trying to trick you. But you guys are so awesome. 75% under the purchase is 75% LTV. So that means you need to have 25% down payment if the loan amount is 1.5 million, maximum loan amount. If somebody refinance rate, we're gonna cross the table to the last column. If the loan is the refinance rate in term or cash out, maximum loan to value is what? Yell out. What is the maximum loan amount for refinance cash out or rate in term? 70%. 70%. Does anyone on the Zoom, you see what going on here? Do you follow? People on Zoom?
Yes.
Awesome. Kim, you got it, right?
Yes.
Awesome.
Thank you.
Awesome. I want to make sure everybody with me, okay? I don't want to lose you guys. So, for purchase loan, 25% down payment with someone 700 FICO score, maximum loan amount is 1.5 million. For maximum loan amount 1.5 million, if you are refinance rate in term or refinance cash out, your maximum LTV is 70%. Now at 700 FICO score, if you have to have a bigger loan amount, $2 million loan amount, then you have to have 30% down payment if you're buying a property. We all see it, right?
Yep.
70% LTV, that means 30% down payment. And if somebody want to borrow a loan of maximum $2 million and with his or her credit middle score is 700 and refinance rate in term or cash out, maximum loan to value is 65% loan to value. And you go down to the second part of the table for 660 FICO score, you will see when you have lower credit score, your down payment is 5% more. Do you see that? Yes. Anybody on Zoom, you see that?
Yes.
Yeah.
For 1.5,
Yes.
yes, awesome. $1.5 million loan amount. Instead of 25% down payment, now you have to come up with 30% down payment because the maximum LTV there is 70% for 660 FICO score. Okay? And for your refinance rate in term or cash out, your maximum LTV is 65%. I don't need to read the last one, the $2 million. So I'm gonna check on you guys. So $2 million, what is, with 660 FICO score, what is the down payment, the minimum down payment? Everybody yell it out. How many?
35.
35%, you got it. You all graduated from this class. Honestly, it's, not everybody can read this table. Trust me. Only you guys at Pacific Watch. No, I'm serious. Who would talk about this table? No one. They don't care. I help you. I train you to read guidelines, you guys. What we're doing the whole time here, you've been reading guidelines. Who read guidelines? Only nerd, me. But I train you how to read guidelines so you all know how to read guidelines. I don't only read guidelines from Lender, I read guidelines from Fannie Mae and Freddie Mac. The one who read guidelines is the one who know how to do the hardest one. Because guidelines tell you everything. If you miss out on the guideline, you miss so many loans. If you didn't read the guideline, the new guideline come out, hey, I can do loan for no credit borrower. If you don't read that guideline, tomorrow someone walk in your office say, I have no credits. Go home. Because I don't do loan for no credits. If you don't read guidelines. But because you read guidelines, you know, hey, I can do your loan, no problem. The other office turn you down because they don't read the guideline. But I do. There are so many things from the guidelines that save you so many loans. Because guideline is so awesome. There are so much to read. But if you read it so many times, then there's not much to read because you get used to it. You know exactly where to go read the information you want to read. Just like everything, like you guys read prelim, like so many pages. But if you read it every day, you can read it in 5 minutes or 2 minutes because you know exactly where to go find the information that you need. You don't read page by page. You don't read line by line. Same thing, guideline. You don't read line by line. You don't read page by page. If you read it every day, you know exactly where to go find information. So, you know what? Be awesome. Read. Read, read, read. Important. Use your knowledge. Never stop learning. Okay. Any question before we move on? So you guys know if you attend the training every week, you are way ahead of so many people. Doesn't matter how long they are in the business. They might be in the business 30 years. Even worse, they know nothing because they don't attend training. To me, myself, I learn every day because I know the more I learn, the more I feel like I know nothing. Because so much to learn. If somebody said, I know everything, I don't need to go to any training, then good luck to that person. Because his knowledge is too old. What he knows is so little. Seriously, go attend training is really important. So make your time worth it by whatever you learn, take notes, and talk to your client. Today you can go home and talk to your client. Your friend say, you know what? Now I can do loan for people who have no credits. Or you can go to social media. Tell people you can do loan for people who have no credits. You're amazed by how many phone calls. They're gonna call you. What? You can do loan for me, no credits? I have no credits. Right? You will call someone else. You will. Make use of your time here. Don't just waste it. Don't just go here and listen to me and go home do nothing about it. Do something about what you learned. Don't just do nothing about it. Okay? Okay, let's continue with the 5 to 8 units. For appraisal, a full interior inspection for all units. So this is the requirement we have to turn in. Okay? So we have to order a full interior inspection for all units. That means the appraiser have to come in each unit and take picture and write about it. And we need to turn in the rent roll of the property. We also have to turn in the income and expenses statement of the property that you're buying or you refinance, the 5 to 8 units, not your income, the unit income. So remember, 5 units and above are commercial property, and commercial property is income produced property. So we care so much about their income. So you need to provide income and expenses statement of the property, map, plot plan, or survey of the property. So this, you might not know what it is. Don't worry, when it comes to, you can just ask them, they provide to you. Okay. When the appraiser doing the appraisal report, in the appraisal he has to state that no health or safety issue of the property. If anything say, oh, whatever in the property create health issue or safety issue, then we're in trouble. Okay, so there will be no health and safety issue at all. No structural deferred maintenance. So so that means everything has to be complete. Nothing like in the middle and will be done. You know, like especially the foundation, the roof, electrical, plumbing. Those are important. Lease. Somebody read it for me. Jose, read me the lease.
Use lower of estimated market rent or lease agreement. Short-term rental income not eligible. Vacant units, use 75% of market rents. Max 2 vacancies on 4+ units. Reduce qualifying rents by any management fee reflected on the appraisal report.
Okay, thank you. Okay, so the first line is use lower of estimated market rent or lease agreement. So if we have the lease agreement and then we also have the market rent, because when we do appraisal, I think the appraisal will come up with the estimated market rent. So whatever number lower, lender gonna use it. If the lease agreement say 20,000 and the market rent say 18,000, then we have to go with 18,000. Okay, that's just the meaning of it. Short-term rental income is not eligible. That means if somebody have
Airbnb.
Airbnb in this case is short-term, or somebody rent month-to-month lease, that not gonna work. It has to be at least annual lease agreement, right? Vacant units, okay, use 75% of market rents. So for even you are buying an 8-unit properties, and then it all tenant in there. Tenants all fill all 8 units. But when we do a loan for them, the purchase loan, we have to use 75% of the rental income. We cannot use 100%. This is the guideline. Because lender, they try to be conservative, because at some point you might lose 1 or 2 tenants. I cannot consider 100% of your rental income. I can only consider 75% of it. And they allow 2 vacancy if there is a 4-unit and more. If you buy a 5 units and there are 2 vacancy, that's okay. But if you have 3 vacancy, then we cannot get a loan, because you have 5 unit and you have 3 vacancy, you're not gonna get a loan, right? Okay. Actually, even 8 unit, you still only have 2 vacancy allowed.
You know, usually the rental agreements, you usually rent for the first year, and then subsequently it'll be monthly. So do you have to change your lease in order to do this loan?
Yeah. Good question. So Jibangan asked, normally the first year is a 1-year lease, and then later on only it's monthly. Yes, for the purpose of the loan, you have to provide a yearly
So you have
lease
to go and
agreement.
change it.
You have to change it to get the loan done, and then you can change back. Yeah.
So Minjao, what if the tenants on month-to-month, do we count?
No, we just talk about it. If it's month to month, we
So-
have to change the lease.
No, that's the short term is different from month to month. Let's say that you have a long-term tenant there, but they're on month to month, right? So this does it consider as a short term, or is it how do we count it?
Okay, I see this a lot, June. So Jibangan just mentioned it.
It's a long-term renters.
It's a rental renter. So some
automatically-
renter living in the property for 15 years,
Yeah.
but their current lease is month to month,
Yeah,
right?
it's always monthly.
Lender doesn't want to see that.
It's not
So
still
you
not
have to
stable.
go and
So for the purpose of the loan, you have to have something else. Even though there is a month-to-month lease there, but you have to have something else. Don't tell people I tell you this. It's secret.
Actually,
Extra documents.
So anytime when we submit a lease agreement, they don't check the day of the lease agreement. So you can submit to them the first lease agreement. That is 1 year.
Oh, okay. Then you
I
can
can't hear it.
Okay, she said do not submit the current lease agreement. Submit the old lease agreement.
The original.
The original one. The 1 year, the first lease agreement, the very old first lease agreement, because that's a 1 year. She said because they don't care when the lease, they in contract in the lease. As long as you show it the annual. So go back. So okay. So for the investor, for the landlord, keep all the lease agreement, and then give us the first one, because the first one is the one who have the 1 year lease agreement. Don't give us the current one, because the current one will have the monthly. Good one. Hey,
But
good.
does it
See.
depend on the lenders? You don't know, right?
Yeah, I just work with UWM, so they didn't care about the day of it.
But that's only for
Maybe
commercial or
the
just
underwriter
residential.
too. We don't know.
Don't worry about it.
Which
Just
is
give them the
safe.
old one. If they want a different date, you just give the different date. It's not easy.
Someone sleep on the
extra
wheel then.
document.
No worry. But that's a good
Okay.
one. That's a good one to know, right? Better than
Minh Châu, I have a question, Minh Châu.
Yes, yeah, go ahead.
Minh Châu, what if the buyer intend to occupy one of the units? How would that work?
I think that's okay. That's okay. Because they rent out the rest. But I have to work on the detail with lender. I don't think it's a problem. But
So,
this is new.
so the income will count on the other units, but not the one that intend to occupy by the owner.
Yeah. Yes, that's right. Thank you.
Okay.
Thank you.
Thank you.
So the last one, reduce qualifying rents by any management fee reflected on the appraisal report. So if we say there is a management fee, then they will reduce our rents income by the management
Part of the
fee.
expense.
Yeah, that's understandable because normally it's 10% or something like that.
What do they do with utilities?
What do they do?
Utilities. Usually for the 4 units, you have to pay utilities for the renters.
In this case, you see the utility will be in the expenses statement. You see that?
Yeah,
So don't worry, they will take into account everything. But right now, for this purpose,
That's what
we
I
only look into the DSCR. Remember? The DSCR. But they do look at everything. But to qualify the loan, it's really easy. They only look at the DSCR.
Okay.
That's a good thing about it, right? Any question before we move on to the next slide? No? Moving on. Let's look at this one, credits, middle of 3 or lower 2. So if somebody, okay, when we run credit, some people have 3 credit score, then we get the middle one, right? You all know it, right? The middle score. If somebody have only 2 credit score, then we get the low of the 2. That's easy, right? For people who have bankruptcy, foreclosure, short sale, it has to be over 24 months. Over 24 months, everyone. And no mortgage late payment in the last 24 months. No mortgage late. So when you talk to your client, it's important that they make the mortgage payment on time. No mortgage payment late the last 24 months. If they do have those, we cannot do the loan. If somebody have bankruptcy, foreclosure, short sale within 24 months, we cannot do the loan. Somebody have 1 late payment in the mortgage in the last 24 months, we cannot do the loan. Minimum 2 trade lines with 24 months activities. So only 2 trade lines. This is easy. Wow, the underwriter are getting easier and easier now. In the past, actually for this particular loan only, okay? For conventional loan, we need 3 trade lines. What are trade lines, everyone?
The credit card.
Credit cards.
Credit cards,
Car loans.
car loans,
Revolving
mortgage
credit.
loan,
Revolving credit.
student loan. Everything is in your credit report are trade lines. You have to have at least 2 trade lines, and it have to be 24 months activities. If somebody have 2 trade lines but only 12 month activities, we cannot do the loan either. That means they only have their credit card for the last 12 months. We cannot do it. So they have to be over 24 months. So if you know someone just come to the US recently, ask them to apply for credit cards, because at some point they will become your clients. They will need to have show credits, right? And ask them to apply 3 trade lines, not 2. Okay. 9 to 12 month PITIA reserve. That means they have to have reserve money beside the down payment. The people who apply for these loans have to have reserve money. So their monthly property tax, insurance, mortgage, and everything have to be. They have to have 12 months of those available in the bank account to show the lender beside the down payment. Gift fund not allowed. Not allowed. But remember, we don't care about the large deposit, so who care about gift fund? We don't even need donor in this case. It's
You don't
awesome.
announce that gift.
We don't even want that gift because you have to ask for donors.
You just
Now
put
we
it in
have
the
the
bank.
money in the bank account, the large deposit doesn't matter. Yeah, investments are no go give at all. Any question before we move on? No question? Moving on. Okay, so what is your business goal? This year, this month, next month. You know we are almost end of February. Can you believe it? Almost end of February. Only a few more days, it's done. This is fast. So you guys, don't sleep on time because time is precious. You'll never be able to get back to February 14 of 2023. I had a great time. Remember February 14? February 14 is Valentine's Day, guys.
After Valentine's Day, the year's over.
Anyway, I want you guys to go home, do something for you today. Call at least 5 people you know. Talk about what you learned today. 5. 5 people you really know, or your clients. Hey, we can do loan that we don't need credits. For conventional loan, hey, conventional loan, no credits. We can do a loan for 5 to 8 units. We don't need your tax return. It's really easy. And we can do HELOC line. We don't touch your current rates or your current loan. We can do credit HELOC line for you. Can you do that? 3 things, 5 people, HELOC lines, no credit borrower, and 5 to 8 apartment. You can do this to 5 people you know, or you can text to 20 people you know. Text, create one text message, text to everybody, or send a massive number of people on email. Just tell people what you know. And we also remember about a cash out refinance, we have to wait 12 months. Tell people, before we wait only 6 months to refinance cash out, but now we have to wait 12 months. But if you have any question, you let me know. So there are 4 things for you to talk about today. So refinance cash out, wait 12 months. HELOC line, we can do it without touching your interest rate right now. And we can do 5 to 8 units. And we can do HELOC loan.
Realistically, the non-traditional credit, how much higher is the rate compared to the norm?
For which
People
loan
with
program?
no credit,
For which loan program?
people with no credit scores.
In the past, for people who have no credit score, I cannot do any loan.
Right.
So I don't even know. But for the 19 people, when they have no credits, I do the non-traditional credit by asking them to provide 12 months of utility bills, 12 months of whatever. I need 4 of those so that I can get them a loan.
No, but I mean,
The interest rate?
realistically, what's the rate? Higher.
The rate will be, the rate gonna be at the same rate with somebody have FICO score of 660.
Wow, that's not bad.
So because interest rate depend on their credit score, so you can just give them a rate with the credit score of 660. So it's not bad, right?
Yeah.
It's not bad at all. So I hope everybody on Zoom and everybody here make use of today's time. And I really want to see you selling, bringing loan to the loan department, because our loan department, we have people that waiting for your loan packet to send in. Remember, we can do mobile home loan, we can do HELOC loan. Those are important. A lot of people still don't know Pacific Wire do mobile home loan. Oh my goodness, we've been doing that for years. We do mobile home loan, we do HELOC loan. We do all kind of loan. Now we do 5 to 8 unit loans too. So I want everybody on Zoom, everybody here, go to your social media and talk about what we learned today. You don't need to say much, you just list out what you got here today, what you learned from here today, and then you will have phone calls, trust me. Because you will hit one of the people who need those products and they don't know where to ask. A lot of people don't know where to ask, where to go for HELOC loan, where to go for 5 to 8 units loan. So please talk about it, okay? Thank you everybody for your time. Thank you.